Good morning, everyone. Welcome to our Tuesday morning trading session. And I'm just looking at the charts here. I was hoping the market would be a little bit more active today, but it sure does not look that way, does it? If we take a look at the overnight here, well, the overnight was very quiet, relatively speaking, and yesterday's range here on the Eagle, you can see, was just one great big sideways trading range. And here we are, right back at the top of the trading range. So we'll see whether or not so I'm just wondering whether or not they're going to actually break out here today, or whether or not they're going to stay within inside this trading range. Alrighty, well, let's give them a few moments here to get their bearings. And we'll see whether or not they actually bounce lower. Now, we are getting a signal here on the Falcon. If you wanted to get a feel for the market, we do have a Falcon trade developing here. I would probably suggest you take it above this high, however, and considering the market is still range bound, you would have to take the trade below the low. So what we would be looking for here is a quick little breakout. The Hawk doing, well, actually, yeah, the Hawk not really giving us a first micro-macro cross. That came earlier. That came here about an hour, hour and a half before this morning's open. Not enough to jump on board just for the sake of going long. And if we do get filled here on the Falcon, I think what I'll do is I'll negate the profit objective, try to run it out. Gold looking a little bit stronger again through the overnight. Crude oil also picking up a little bit. If you were here for the crude oil open, you got a nice little first micro-macro cross signal there. This one would have been difficult to take because not a real clear retest of the low. In hindsight, I suppose you could say that was the retest right there. But when this one was forming, I don't know. I'd still be looking for another one. And we may get that still. I'm not suggesting that crude oil is in a full-on bull market right now. All right, well, just wait them out here a little bit. It's still early. All right, there they go. So they did fill us, and I'm going to try to run this one out now, just in case the market makes a larger move. Just in case. All right, we're getting a little bit of run out from that. Come on, don't stop now. So here's this bullish breakout that we were talking about yesterday from the trading channel. When the safer course of action is always to let the market try to get outside of this trading range. Once you've identified the market is within a trading range, you need to wait for it to break outside the trading range. So here essentially is our trading range. Now we've got the breakout. So we allow the market to break out, and then somewhere through here, it could be minutes, it could be hours, the market will try to retest this breakout area. Once that occurs, you're going to look for another signal, another chance to get into the trade. And it will happen. It's very, very rare that the market gives you that breakout without that retest and one more chance to get into the trade. The problem with breakout trades is when they don't hold, of course. The market ends up drifting back into the trading range and, well, just ends up churning you about. And that can be make for some very difficult trading. So we did get a signal here on the Raptor as well, which was coinciding with the Falcon trade. And this one, you could see it a couple of ways. I would probably look at it as a, well, I was going to say as a trend change signal or a double pullback, regardless whether you determine that the band had gone bearish here and then flipped over to bullish, or whether the market went into the hard edge twice and bounced out, the choice is yours. It had shades of both. We'll see how they do now that they're above the primary resistance line here on our support and resistance suite. An early reaction to the 4670 area. Come on, don't stop. Come on, get up there. Obvious some sensitivity around 4670. Next real big obstacle up here at 4700. I doubt very much we will see that kind of rally today, or maybe even this week, as the market keeps making smaller and smaller ranges. Okay, so we've hit our high probability profit target if we were running one. And now we just got to get a little bit of follow through here. Come on. There we go. Let's go. All right, so this is probably far enough along that I should consider rolling stops at least to break even. So I'll force the trade to break even now. Now here's the tricky part with these breakout type scenarios. Remember, the market's going to move against us. We've got a fair amount of profit here. Don't be afraid to sometimes, there's $150, $160 sitting there waiting for you to pick it up. Don't necessarily let the market peel all that away from you, especially the way the market has been trading of late. You could go with a more aggressive stop, maybe something like the parabolics. Perhaps even the bar high-low, which is ultra aggressive. Come on. Don't stop. There we go. See, they just needed a little bit of encouragement to keep going. Okay, well, this is a nice change to the sideways action that we have been witnessing for the last little while. And in fact, I think it's probably time for me to get a lot more aggressive on my stops here. Yes, we've got a fair amount of open profit there. I'm going to go with the bar high low, I think. And I'll leave it just a couple bars back, maybe with a 2-tick offset. So on the first sign of market weakness, they should take me out. Come on, let's go. So great follow through here on the Raptor. The Eagle also producing a nice little hard edge bounce. So the market came out here with a red bar buy signal a few hours before the open. A very slight retrace, but it did come out with a with trend signal. The hawk would have been the tough one because it didn't really correlate with any of our signal. I suppose you could have called all this a 4-arrow consolidation, considering it was in a sideways range. Kind of, sort of. Definitely one that's easier to see in hindsight, but hey, that's why we have different trading tools, isn't it? The Raptor being the odd man out in that respect, in that it is a hybrid of the other three tools, but even here we did get the double pullback, or as I mentioned, the trend change signal. So the Raptor, or the Falcon trade, progressing nicely so far. I wonder, we're sure sneaking up on that 4,700 area. Come on. Don't look back. Just keep going. There you go. See, sometimes it helps to talk nice to the market too. Come on. Keep going. So another decision bar going on here. If they tip one way, well, then it's going to head lower. If it tips the other way, come on, come on, get going. Nope, I think we may have put in our top. Momentum seems to be waning a little bit. And we are nearing the top of the hour, which tends to be when the market finds the top for the opening range. Okay, couple questions. Oops, wrong button. 1 second, let me get my Falcon trade back. Oh dear, what did I do with it? Oh, there it is. Okay. Whew. At least I didn't close it. When your trade is underway, I do very little to touch the charts. Okay, Keith is asking, Eric, can you show me the double pullback on the Raptor? All I see is chop. All right, well, yes, Keith, you're absolutely correct. There were very few clues that the market would rally from here. We did produce this signal near the top end of the trading range right here. And there were two ways you could see it. You could see it either as a double pullback, in which case your signal produced right here, but that was before the market opened. Or you could perhaps see it as a cloud crossover. Now the cloud did go bearish here for a little bit, and then it went bullish. So the clouds crossed over, the market retreated into the cloud is pushing the market out, and there you produce your signal. Now, I'll be honest with you folks, signals like this, they're really a 50-50 proposition. There's going to be times like this where it's not going to be entirely clear what you need to do. And I don't want to say you want to go with your gut, but we did know we're in a sideways trading range, right? That was pretty obvious, I believe. And in fact, you can extend this range all the way back through yesterday's trading session. You can see from our high and low lines that the market never deviated too far from the opening range. So there's sort of what our trading range looked like. Now the market is trying to produce a breakout signal. Do you want to take the breakout signal is the big question. And again, there's no real easy way to gauge this. Sometimes the first signal of the day will tend to be the strongest. It will tend to have that initial momentum, especially in the summertime. We don't see a lot of volatility during the summer months. So sometimes it's best to take that gamble, throw that trade on, cover it way down here, and if we know at the very least the trade is going to break out for a few bars. If it breaks out from here and then starts to retreat against you, right around here somewhere you would anticipate the market's going to try to turn. Why right here? Well, this is your last swing low, and actually where the low of the morning, where the market opened. Next swing lows are way down here, followed by yesterday's swing lows way down here. So somewhere through here you would anticipate the buyers to recover the market. If they did not recover the market and it kept slipping lower, and let's say we got near halfways of the trading range, right now I would be thinking I'm probably on the wrong side of the trade, or the market's just going to remain in this larger trading range that it was in yesterday. Now, if that's the case, then I'm going to be on the alert for anything resembling a sustained rally, maybe 2 or 3 bars in my direction. That gives me a chance to roll up my stops. But I'm not going to bring my stops in ultra tight. Actually, maybe what I should do is I should look at yesterday's session, because yesterday did exactly that to us. We shorted a signal, I think it was on the Falcon again, but let's say we shorted this trend change signal here, or cloud crossover signal on the Raptor. All right, so here's our signal. It's essentially the same thing that's in reverse. So yesterday the market was looking to go lower, our stops would go above the high, and the market goes down, engages our order, and then starts coming against us. This is actually what I anticipated to happen this morning, that the market starts to come against us, and now it's either going to be the market will reverse and start to head lower, in which case we should see a pretty clean breakout, and I can bring my stops down and start to work the trade lower until I can get it, to break even at least, or close to break even. But yesterday, the market was not willing to do that. In fact, yesterday, the market continued to retrace. Now, it's not full-on panic mode yet. They did breach that high. They did not breach this high. Now, if you were in the room yesterday, you know how reluctant I was to bring my stops in too tight, because at this stage of trading, it's starting to look more like we are inside of a trading range type scenario. And as the day went on, that's exactly what happened. The market floundered around a little bit, and it's starting to look like we're in a trading range. Well, now we're starting to get a little bit more follow through, aren't we? We're starting to see the market head a little bit lower, maybe commit to something a little bit more bearish. Well, we can maybe say at this stage that, all right, we've got something resembling a high. We could bring in our stops, or it's still fairly safe to leave it back there. So the market's still floundering, Okay, now See how different this looks? Now it looks like we've got some downside commitment. Now we can start to bring our stops in and maybe become more aggressive with our trade and start to cover some open profit or even just run a profit objective. This is very much how I anticipated today's range to work out. You know, let's say we bring in our stops here. This is essentially a break-even trade now. Or if you wanted to protect some profit, you could roll your stop in above the high of that particular candle and get stopped out with a little bit of profit or at break-even before the market and re-enters that trading range. So that's very much how I anticipated this morning's session to go. That we would get the initial breakout, the market would peel against us, then we would see something resembling support. The market would start to rally, in which case I could start to bring up my stops a little bit, but not too tight, in case there's one more dip lower, looking for some weak buyers. And then sometime through the day, I would anticipate at least a rally back to my profit objective, in which case I would be smart to take profit on target. Today, however, was one of those days where you get the breakout and the market just goes. So there are going to be times when you're going to look at this trade, you're not going to be sure. It's essentially like a 50-50 proposition. So that's why it's so important to contain your risk. You don't want to risk more than you can afford, and why it's also important to give your trade a reasonable amount of elbow room. Remember, your stop loss is not a loss until it gets hit. So don't let the market hit your stop. And I'm not saying move it away. I'm just saying give the trade a chance. Don't frame the trade so tight that the market will tap you out on the first little reversal, because as you probably know by now, these types of rallies are a little bit rare. They can happen, but they don't happen every day. So now we've seen an obvious breakout. The market is obviously bullish. I'm sorry to say that if you didn't get in on that leg, that was likely the move of the day. Again, another reason why sometimes you just need to take the chance. And of course, I would have liked to take a larger position, but it was a 50-50 proposition. It wasn't something I wanted to load up on. So now we know the top end of the trading range is right here, give or take. Now the market is sometime during the day, it will retrace and try to retest the top end of this trading range. It may be early, it may be very late, it may even be tomorrow or the next day, depending how it's going to play out from here. But right now we have a very strong uptrend. I would not be keen on shorting. In fact, I would probably take my toys and go home. So the bar high-low maximized our profitability on this trade, which was nice, taking us out on that very first bar that reversed against the trend. Here on the Falcon, it was, well, the trend change signal came back here. This was just your basic trend line touch, but again, it was an early signal, right? It was right out of the gate. And occasionally you just need to hop on those. Okay, Paul's asking, Eric, can you go over the soft edge sell and hard edge bounce on the Eagle? Sure. First off, Paul, there is no soft edge sell signal on the Eagle. That is a raptor signal. Now, maybe we should be looking for one. I never considered that. With the eagle, our counter trend signal is what we refer to as the rule of three. And let's see if I can find you a decent example of a rule of three. Ugh. All right, I guess this one will have to do. A rule of three is a counter trend signal. So by its very nature, it's going to be a little bit more risky. It is a high probability signal, however, if all the conditions are met. So you shouldn't necessarily shy away from it just because it's counter trend, but you do need to have a few of your ducks in a row before you try to put money on the trade. Before you can have a counter trend signal, you must have a trend. So that's condition number one. Condition number two is that you've got a market which is in an uptrend, however, you're starting to produce counter trend signals. The market's drifting through the band actually so low that it will produce a counter trend signal. Condition number three is that you must have a retest of the extreme. In this case, the extreme is the high. The market has retested the high, and now it appears as though prices are failing. Right? They're no longer able to resume the uptrend. We had a strong uptrend here, but the market cannot resume the uptrend. That tells us there's something wrong with the buyers, or potentially something wrong with the buyers. What kind of puts the nix on it is the production of the counter trend signals. Now, a rule of three is just a loose way to look at the market. Very often you will get three counter trend signals, and then the market will head lower. Sometimes you will get only two. Sometimes you will get four. I don't put a lot of stock in 5 signals against the trend. If the market is producing 5 signals and the cloud has not changed over yet, then it's probably not a rule of three. You're probably entering a choppy phase. So there is a limit, anywhere from 2 signals to 4 signals. 3 signals, of course, being the average. But so long as there is a retest of the, in this case, the high, so long as there is something resembling a trend beforehand, and it doesn't have to be a monster trend, just so that you can look at the chart and say, yeah, okay, we've been in a little bit of an uptrend here. Now the market, it seems like it's failing. It can't continue the uptrend, and lo and behold, I'm producing signals, counter trend signals below the hard edge of the trading band. That it has all the elements of a rule of three. Even though we've only got 2 signals counter trend here at the moment. All right, so rule of three, when I get 2 signals, I don't necessarily take it on the hash mark. I'll probably take it below that swing low, and then the market starts to unwind a little bit. You see, this was actually our 3rd signal, but it was the band had already flipped over. And then you get your little bit of a counter trend move. Now, you should know that with the rule of three, because it's counter trend, it's suggesting the trend is ending, you can also use it as an early warning signal. Right? You can let the trade unwind, and you can say, all right, where's my with trend signal? Well, here's a green bar sell you could have sold, and here's a with trend signal you could have sold, which are now along with the bearish band. I suppose you could have also sold that one and just left your stops up a little ways to try to ride out some of that heat. All right, so there's your Your counter trend rule of 3. Now, regarding your with trend signals, your high probability with trend signals, those are going to be your hard edge bounces. Whenever the market encounters the hard edge, we anticipate a reaction. So here we've got our red bar buy signal, which is a very high probability signal for us. You can see it's a little problematic with these rule of 3 signals because, of course, they are also working to be a red bar buy signal. You may be looking and saying, well, Eric, why didn't you buy that red bar buy? Well, you could have. You could have. This retest of the high right here, that failure, however, made me a little apprehensive. You could think of it as a double top. We did break through the low here. Not that that's a deal breaker. Whenever the market encounters the hard edge, you'll very often break a little minor swing support zone. But no, that was a tradable signal. This is why sometimes, you know, if we have like a double top, if this were a single top here instead of a double top, I would have bought the red bar buy signal. I may have waited for a second push entry. I may have set it up something like this. The second push entry would not have engaged the signal. If I did take it right on the hash mark, I would have had to do some nifty footwork through here to perhaps try to lessen my risk, but it turns out that, you know, I would have been stopped regardless of how I managed that trade. But the red bar buy, whenever the market encounters the hard edge, we get a red bar and a buy signal. That's a pretty high probability signal for us. The inverse of the red bar buy is the green bar sell, which of course occurs in a downtrend. So there's your green bar sell, there's your red bar buy. And all this is showing you is that the market is gone bullish, it's bullish, it's bullish, and all of a sudden the bar colors start to change. Excuse me just a moment. So the market's changing over, and now all of a sudden it's gone from bullish to bearish, and now the buyers are starting to panic. This is really what it shows you. It shows you that the buyers are saying, okay, well, if we're going to hold this market, we'd better do something because the market is starting to get more and more bearish. So the buyers come back with a buy signal. Notice this one only has a single spike to overcome. It doesn't have the double top type scenario that we saw a little bit later. And so there's a red bar buy signal. You could get in, you buy it, and away you go. The green bar sell signal, the same thing in reverse, where the market is making a downtrend move. It comes back into the hard edge, and now the sellers are starting to think, oh, we got to do something because the bars are bearish, 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 and all of a sudden they turn bullish. So we've got green bars with a sell signal, and those tend to be your high probability setups. And then with the eagle, we also have our trend change signal. This one should have tripped and produced a sell signal right there. I'm not quite sure why it didn't. This bar right here. Something must have happened during the life of the bar to not meet one of the parameters for the eagle, and therefore it did not end up producing a sell signal. I hope that makes sense, Paul. When you look at your chart like this, though, and it's all over the map, the red bar buys, the green bar sells mean nothing. So just recognize that sometimes the market's going to be sideways. And when it is sideways, you have to be very cautious. And when you do take that trade, it is going to be a little bit of a crapshoot. You know, if you're looking at this market and let's see, do we get a decent signal near the low? All right, let's pretend for a moment. We're in this sideways trading range. I think that should be fairly obvious to everybody. The market starts to come down here now toward the bottom end of the trading range. And it produces a sell signal with a little triangle. Oop, can't draw a triangle. There we go. Okay, class, do we take this sell signal at the bottom end of the trading range? A yellow bar? I don't know. We're going to pretend it's a red bar, folks. We're going to pretend that it's making red bars lower and it produces a sell signal. We get a red warning dot. We get our red hash mark and triangle. Okay, Jim says yes. Paul says no. Wait for the breakout and the retest. You're both right. What? How can that be? Well, I guess at the end of the day, it boils down to what you can manage risk-wise as a trader. If you're going to be more conservative on the trade, then go ahead, let it break outside the range. Let it break outside the range. Look for the retest. Look for the signal that the sellers are actually going to recover the market. That's the more conservative method. If you're a little bit more aggressive on the trade, you can look to try to capitalize on this part of the move. You know a breakout is coming, you just don't know how big the breakout will be. It could be a one-tick breakout, right? I've been in those, I'm sure you have too, where the market makes a break, it breaks the low by a tick and then goes screaming higher. It was a breakout, but it only went in trend for one tick. So it really boils down to what you can stomach as a trader. If you think you can capitalize on this part of the move, or at least get your trade to a safe position, or you want to judge how strong the breakout is, that's what I did this morning. That's why I didn't roll up my stops right away. I was trying to judge how strong the breakout was. When it first broke out, it looked like an average breakout. It paused. I thought we were going to get the retest, but then after that pause, that short little pause, it kept going. And my stops were down below the lows, and now I'm thinking, this could be a stronger breakout. I don't need to roll my stops in just yet because, you know, the market's strong. It's, unless somebody, like years ago, this was shortly after 9/11, some Cessna pilot got lost flying over Washington, D.C., and he flew over the White House, and the market went boom, like that within a matter of seconds. When it made the news that there was a Cessna over the White House, the market just fell off the edge. But when it looks like at this point, like, oh, we've got ourselves a fairly strong market, it could still happen that we get this kind of retest. in which case you need to judge, do I want to try to run the trade out at break even, or am I going to try to run the trade out higher, or am I just going to take profit on this little reversal? Those are all questions that only you can answer, and there are no wrong answers here. If you chose to take profit on a little reversal and the market stops you out on the little reversal and then bolts higher without producing a signal, I mean, for you to jump in again, don't beat yourself up. It happens. Trust me, this will not be the last move that you miss in your trading career. You see me miss them all the time. All right, so when you produce a signal near the top or bottom end of the trading range, it's entirely a judgment call on your part. So when we have a signal like this, it's producing near the top end of the trading range. We know the top end of the range is here. I would postpone my entry until we get outside the top end of the range. Because if a breakout's going to happen, this is where it's going to catch some momentum. We'll stack our order with all the other breakout traders, with all the stops that are up here, all the exit orders from the sellers, and there'll be a tiny little bundle of trades right through here. So I know we'll see at least a little bit of an uptick, and then it will be on the bears to try to knock the market back down, or will the bulls push it higher? I wish I could give you a more concrete answer, because I know that's what you want. You want me to say, when the market looks like this, always take the signal. When the market looks like that, don't take the signal. Unfortunately, I can't do that. I can just tell you the things that you need to look for. So here's our trading range. Actually, I'd probably draw it like that. The market made a little breakout. It's not very obvious here. Normally we see a bigger breakout, but see it made a little breakout, a little retest, and then came back with a buy signal. So the fundamentals were there, even though it didn't break out like this, come back and retest it and continue up. This is the same thing as this. And as I mentioned, it was like a 50-50 type scenario. I'm not sure the sellers are actually going to be able to move the market too low today. It may just turn out to be a sideways type session today. Here on the Hawk, we're producing a 4-arrow consolidation. 1, 2, 3. Here's signal number 4. Not a lot of structure down here, right? So I think what I would do, rather than risk the whole enchilada, as they say, either dial down your risk to 1% or just go to manual mode, throw a onesie on there. The problem is covering this trade. Ideally the stops, believe it or not, need to go way down here. Or where did it open this morning? Way down here. This is where the rally started. That's where the stop should go. And Jim says I would have sold the top and faded it back. But you see, that just makes my point. I've never met Jim. Most people in the room here, I'm sure, have not met Jim either. And yet, I think we can all say that Jim is a fairly aggressive trader. You know, I can tell you what type of personality Jim has. He's a risk taker. He's okay, you know, trying to risk capitalizing on a retracement here, and that's okay. That's what suits Jim. That's not what's going to suit Paul or Greg or Melanie or Sue or the other people in the room here. You have to do what is comfortable for you. If there's nothing else you will gain from trading, you will learn a lot about yourself. You will learn about your tolerances for risk, your tolerances for greed, your tolerances for fear, and I'm not saying this in a positive or a negative way. We're all wired differently. I'm not saying, you know, greed in the negative aspect, like with this Falcon trade, when it started to get up around here or so and I started to see a few more tails on some of these bars, it was my greed that made me choose the bar high-low strategy. If my greed tolerances were higher, in that I was willing to offer up a little bit more of a pullback in an attempt to get a move higher, I might have chose, you know, to leave my stops back here somewhere. But there gets to be a certain point within a trade where I just don't want the market to take the money away from me. Right? We made a good call. We entered somewhere down here. What did we end up with? All right, so we ended up with $300. Right around here, we're starting to press 250, 220, 230, 250. I know that's a lot of money on the Falcon because our high probability targets are usually only $100 out. Right, so we hit high probability target number 1 right around here. The market tried to reverse, but did not. Hit high probability target number 2 right about here. Now we're up about $200. And again, it's starting to be, well, how much of this money are you prepared to give back? Well, I'm not prepared to give back. So I start to get more aggressive with my stops, and we get stopped out there, and we make a $300 profit. But that's how I'm wired. If you're more conservative still, and you can't stand the notion of even giving up the $100, then take the $100. I saw a very interesting documentary, and this is years ago. It was like 30, 40 years ago. They were interviewing some traders, and they were all, you know, they ran the gamut. Everything from a farmer turned trader to a doctor turned trader. And the farmer, he was very level-headed with his trading, but he wasn't prepared to let the market take too much money away from him. I suppose being a farmer, you work pretty hard for your money. And he did okay. In fact, his wife was with him, and she was joking, you know, that if he had been more aggressive on a particular trade, they wouldn't have had to fly commercial to go out to do that filming. They could have chartered their own jet. The doctor, on the other hand, he was ultra conservative compared to the farmer. The doctor, whenever he was up $200, he would take the money, which I thought was interesting because doctors, you would think, are maybe a little bit more risk takers, but not this doctor. This doctor was ultra conservative, and he didn't care how much further the market went. If he had $200 in profit, it was thank you very much. I'll take it. And that was how he traded. So actually I got that backwards, didn't I? The farmer was the less conservative, and farmers by their nature are risk takers. There we go, I got it right. Farmers by their nature are risk takers. Doctors are not risk takers. There, I knew there was a moral in there somewhere. I screwed it up. Yeah, it's a good analogy. Jim says it's like hitting a certain pitch. For those of you who are baseball fans, you know, the big hitters, the guys that are always leading the league, they'll foul off ball after ball after ball on purpose until they get the pitch they want. And then sooner or later, the pitcher's going to have to throw that fastball, and it's just going to be pitcher against batter. Can the pitcher throw it faster than the batter can hit it? And if your last name is Chapman, the answer is probably yes. Steve's asking, how's my back? Well, thanks for asking, Steve. It's much better. I had a little bit of a bulged disc that was making my life just miserable. I still wear a brace just to keep myself from bending awkwardly, but I'm wearing the brace less and less. Okay, good question here from Paul. Paul asks, so with the hard edge bounce on the eagle, can it penetrate the hard edge by a bar or two and count as a signal? Great question. Yes, is the short answer. And in fact, I'm going to find you one here that is very, very sloppy, just to illustrate the point. Okay, this is not a perfect example, but we're going to go with it. And we're going to use our imaginations just a little bit. Remember, the only thing that is real on your charts are the prices themselves. These clouds, the filter and everything, these are all mathematical interpretations of what is happening with the price. So if the parameters fall out of sync just a little bit sometimes, it doesn't necessarily negate the signal. If when you're first starting, you're probably better off sticking to the purest signals. Don't start interpreting too much. But this is a classic green bar sell where the market actually drifted well above the hard edge. If you ignore for a moment that this band actually went bullish, I'll try to find you another example, but you'll see this time and again where the market will encounter the hard edge and it will drift, it will drift, it will drift, and then all of a sudden it comes back with a green bar sell, or in the case of an uptrend, a red bar buy. So yes, Paul, it is perfectly acceptable to allow the market to drift through the edge. What we're looking for is we're looking for the band to remain constant. So this one only fudged the hard edge by a couple of ticks. That's okay. This one fudged the hard edge by a couple of ticks. This is just choppiness again because the band is waffling, the filter all over the map. Actually, oh no, that band has already turned over. See, the markets have been so sideways the last few days. See, here's a red bar buy where we broke the hard edge. Oh, this is a pretty good example, I guess. The market drifted well below the hard edge, but notice the band never became bearish. So yes, this is still a valid red bar buy. This one right here, notice that's practically textbook. This one, not textbook, but still a red bar buy. Let's see if I can find just one more. See, here's a nice little red bar buy, or a series of them. Here, this one's pretty good too. So the market drifts. We get the breakout from the trading range. So it looks like we've had something resembling a trading range here. Something like that. We get the breakout from the range. The market retreats. So usually about the top third of the trading range is where I anticipate the market's going to give me a reaction. This one actually drifted halfway, which would make me a little bit leery. My stops would be down here to start. And right now I'm thinking, oh gosh, did I just get trapped on a fake breakout if I bought this breakout here? So if I didn't buy this breakout, now I need to make a decision on this red bar buy signal that's printing right here. Oops, wrong button. Red bar buy signal that's printing right there. So I need to make a decision on this. While I could look to buy, my stops probably should go down here, and then the market starts to move up, and by this point I'm starting to think, okay, I've got myself a good trade, my stop's at least to break even, and maybe even a slightly more aggressive stop depending on how much open profit there is. There's probably nearly $200 here in open profit. Yep, so we've hit our high probability target. If this was in a runner, I would certainly start to get more aggressive with my stops, because I know the eagle, after reaching a $200 target, normally will give me some sort of reaction. So, great question, Paul. We did produce a trend change signal here in the Falcon. Right there. We have all the elements. The trend line changes color. We have the down. We have the up. We have the down. But you do need to take the context into consideration. I'm going to have people writing me today saying, Eric, why did that signal not work out? You told me this is what I should do. Yes, but you're also selling into what is obviously an uptrend. Does that mean the signal is not valid and I shouldn't take it? No, you can take the signal. You just need to be more cautious. Maybe we're going to dial the risk down to 1%. We're going to look for a second push on the entry. But let's say we take it there. We're going to cover the trade above the high. And if we can't, for 1% of our capital, maybe we need to ignore that trade. Maybe we need to say, I can't afford it. That's the whole point of the trade manager, remember, is to keep you from blowing yourself up. If you're really anxious about the trade, then go ahead, dial up your risk, take the trade, but realize that the market may have a very difficult time getting to your profit objective given this earlier uptick. So don't just concentrate on the last 3 bars. You got to try to get a feeling of the whole thing, what's going on here. Same thing with the Raptor. The Raptor is producing a soft edge sell signal. It's almost a perfect soft edge sell signal. We've had a retest of the high, a little bit of a failure. Here's a soft edge sell. So should we sell this class? Nobody's playing. You're cheating if you wait for it to unroll all the way here. Should we take it? It's a soft edge sell signal. Should we take it? It's one of our high probability signals. Oh dear, I can't get anybody to play. Everybody's waiting to see whether this bar goes up or down. Well, we could do a couple things. If we're unsure, we could wait for a second push on the entry, right? So the signal has engaged. Let's see if the market retreats away from the signal. If it retreats away from the signal, then we know the current limits of the buyers and sellers. It is a high probability signal, folks. You should sell it. But, oh, sorry, I don't want to sell it for the whole thing there. So now we're getting the second push on the entry. It's obviously counter trend. So if you choose to short it, you should run a profit target and maybe even lessen your profit target. Maybe instead of 20 ticks, you want to do 10. Just get me in, get me out, get my profit. Let's see, where's 10 ticks? Yeah, there's 10 ticks right there. So just look for a scalper's target. We'll bring our break-even trigger in. The problem with this trade is stops need to go above the highs. Well, actually, ideally above that high, but this will be good enough to start. Russell's asking, should we expect the high to be retested? Yes, sir, absolutely. I would. The other thing that should have, or you could have considered in this, if you said, no, Eric, you don't want to short because the market's paying off in a bullish direction. That's a very good argument. Normally, if the market is paying off in one way, I will only trade that way until the market shows me otherwise. This is just a little short-term hiccup lower. I do not expect a full-on reversal here. Don't think we're going to see a retest of the lows. That was, I think, just too much buying pressure. Oh, well, we'll see now whether or not they can press that lower. All that earlier upward momentum now all of a sudden the market's just flat, just a trickle. Gold tailing off a little bit. A little bit late for this one, but this not an easy signal to take given how the market was waffling here. Not a whole lot of context to build your trade on. It's summertime and the trading ain't easy. Come on. Geiger counter just stuck on the short side. It was hard over there. Come on, there we go. Just give me a couple of ticks. All right, see these candles with these little wicks above them? That showed us that there was some serious market struggle going on there. While I shouldn't take the trade to break even just yet, I will take it above those highs to minimize my risk. If the market stops me out here, I'll give it just a little bit more. Maybe 46.74. Come on, you guys and girls. Don't make me pull out the magic mouse again. All right, here we go. Use your mouse to pull the market down. This isn't really fair to other traders, but we got to do what we got to do. There we go. See how it's working. All right, we hit our break even. There we go. Come on. There we go. And we hit our profit target. Oh, phew. I don't like to manipulate the markets that way, but you know, every once in a while we just have to do that. I'm waiting for the day that somebody who is watching these recordings on YouTube writes Adam and asks for the magic mouse indicator. And Adam's going to write me and ask me, Eric, what's a magic mouse? What are you telling these poor people? So Russell asked, of course, should we expect the highs to be retested? Yes, I would say so. However, there is a caveat to that. The longer it takes the market to retest the high, the less influential this rally is going to be. So what I'm saying is, if we haven't retested the high by, early afternoon, then this bull rally will have very little effect on it. In fact, I'm just watching the market head lower here. We haven't seen, well, I guess this rally bar here, but when did that occur? 7:25. It's been about a half an hour. We haven't seen a rally bar. See, now all of a sudden the momentum seems very much to the short side. Ooh, all right. I think we can forget the highs being retested. Hey, look at the bottom fall out of the market. Just another example of why DTS is smarter than I am. We did get the trend change signal here on the Falcon. The Falcon saw it coming. Oh man, we got a full retracement of today's session here on this is where the market opened, or the low of the morning. We blew right through there. Yeah, it's no longer a bull market by any stretch. So I want to amend my answer, my earlier answer to Russell. No, we are not going to see a retest of the high today. Now we're trading back around 46.50-ish, and that is right in the heart of the trading range. Crazy. Yeah, I think you're right, Jim, making a comment here. He says, perfect sell bot action. I think definitely a few trading algorithms got triggered there. So here was the short signal on the Falcon, which was doable with stops above the highs. No problem hitting the profit objective, but you see these bars here where we had maybe a little itty-bitty retest when the market first broke out. All the buying that was going on through here, this is where we got on board. So additional buying through here. Watch what happens when the market starts to encounter those orders. All right, so we start stopping out buyers who bought here and placed their stops around here. We start tripping up all these buyers who bought here and left their stops break even or perhaps down here looking for a larger swing. Well, look at that, blew all the way through. Primary support settled on the secondary support line. That's amazing. And now that we're near support again, namely near the bottom end of our trading range, now we see some buying coming back into the market. Oh, interesting. Jim says not a lot of sell volume compared to the morning buy candle. Where'd the buyers go? If the sellers didn't take them all out, where are the buyers hiding? Below the lows of the trading range? Tough signal here This, believe it or not, is our first micro-macro cross signal. Problem is, where am I going to cover the trade? Ideally above the high. Ooh, look at that. Oh, that's because I'm on manual mode. I was going to say, how can I cover that trade? If I chose to cover it maybe to the crest in the macro line, still out of reach. Just take a chance, cover halfways. Just so I can get in. Might have been a good idea. Not going to get a lot of chances to enter a runaway market. Runaway markets are great if you're on the right side of them, but trying to jump into a runaway market is, well, you just take your chances. The directionality is not the issue. The issue is, where do I place my stop? Well, we're hovering here 46.44. I think the bottom end of the trading range is around 42, 43. All right, well, we're seeing some support come in. We now have a huge, huge range. Right back. Oh, actually, didn't even notice. The morning just flew by this morning. We actually saw some activity in the market, which made trading a little easier. I think we're going to see the market flounder today, though. How I said earlier, I didn't think that the sellers necessarily would have enough to push the market lower. Rather, we were likely to enter a trading range. Well, now I'm going to say the exact opposite about the buyers, where the bulls seem to have full control of the market. The buyers will try to rally, but I don't think we're going to see them rally it too hard, given that the buyers just squashed them and then some. So from here on out, I would anticipate the market's going to try to find, it may rally up a little bit, try to find the top end of a trading range. It will rally down, try to find the bottom end of a trading range. But I suspect the rest of the session will be more or less sideways. Sideways to down. Right now the nod goes to the sellers. However, I think we are going to see this current support hold just for the time being. Hawk is flashing a macro pullback signal here. It's the exact same problem with that first micro-macro cross. Where in the world do I cover? Could enter below that low. At the very least, you need to cover about halfway. See, I can't even afford halfways. So this type of trade, I'm afraid I just got to sit on my hands a little bit longer until we get a little bit more structure. But if you're the anxious type, you can look for a little bit of a rally here. Look to buy in. I don't think we're going to get a monster retracement, maybe as high as, oh, I don't know, we're sitting around 46.50, 55, maybe 65 at the outside. That may, I'm just spitballing now, just guessing what the top end of the range might be. All right, you guys, we're going to shut down the room for this morning. Reminder, tomorrow's trading room is the alternate venue. We're going to meet at the public trading room, and hopefully we'll see a little bit of market activity then, so it's not too terribly boring. All right, you guys, we'll talk to you tomorrow then. Bye for now.